Hello everyone, this is Dr. Hessa Al-Fadhel, the course coordinator of Accounting 112. In this video, I'm going to explain Chapter 5, Part 1. The chapter title is Accounting for Merchandising Operations. The first learning objective in this chapter is to describe the merchandise activities and identify the income components for a merchandising company. If you remember in Chapter 1, in Chapter 2, in Chapter 3, and in Chapter 4, we talked about service organization. And when we say service organization, we mean by the company that they provide services. So service organization, usually they sell time to earn revenue. So one of the examples of the service organization, which is accounting firms, law firms, and plumbing services. Now, for those service organization or service companies, in order to calculate their net income, I need to say revenues minus expenses to calculate the net income. In this chapter, we're going to learn about the merchandise company. So what do I mean by merchandising companies? Those companies that they sell product to earn revenue. For example, sporting goods. If I'm a company that I sell sporting goods, so I'm going to consider myself as a merchandise company. Why? Because I'm selling here some products. If I'm a company that they sell clothing, then I'm going to consider it as a merchandise company. Again, why? Because they sell products. And also auto parts stores. So for merchandise company, when we're going to calculate the net income, it's not going to be like the service organization where revenue minus expenses. It will be a bit different. We should take first the net sales minus the cost of goods sold. Then it will give me here the gross profit. Then the gross profit will be minus the expenses, and then I can calculate the net income. Remember, this is very important. Please pay attention and differentiate between how to calculate the net income in a merchandising company and in a service company. The second learning objective of this chapter is to identify and explain the inventory assets and cost flows of merchandising company. A merchandising company operating cycle always begins by purchasing merchandise and ends by collecting the cash from selling the merchandise. The length of the operating cycle will be different across the types of businesses. For example, if we have a department store, they often have an operating cycle of 2 to 5 months. But if we talk about the grocery merchant, usually they have 2 to 8 weeks. So as you can see in Exhibit 5.3, the operating cycle of a merchandiser with a credit sales. The inventory systems. First of all, what do we mean by the inventory? We mean that our stock of our merchandise. And when I say merchandise, I mean by the products. So in Exhibit 5.4, it shows that the company merchandise available for sale consists of beginning inventory plus the net purchases, what we purchased during the year. So if I say beginning inventory plus the net purchases, it will give me the merchandise available for sale. And the merchandise available for sale, we either sell it and then we are going to have a cost of goods sold, or we can keep it for future sales, which we'll call it ending inventory. The inventory system or the stock system. We have two alternative inventory accounting systems that we can use to collect information about the cost of goods sold and the cost of the inventory. We have perpetual system and we have a periodical system. So what do I mean by perpetual system? Perpetual system means we update the accounting record for each purchase and sales of merchandise. Whenever the company is going to sell or whenever the company is going to purchase, the company is going to record those movement in the inventory. So they are going to track the inventory after and each purchases or sales of merchandise transaction. But when we talk about the periodical system, the company, if they choose the periodical system, they're going to update their records for purchase and sales only at the end of the accounting period. So they're not going to track the inventory or with the movement of the inventory if we purchase or we sell. They're going to wait until the end of the accounting period. Then they are going to track how much left in their inventories. The third learning objective in this chapter is to analyze and record the transaction for merchandise purchases using a perpetual system. Now we're going to see some examples related to the purchase of the merchandise. So now the first case is purchases without cash discount. In November 2nd, Z-Mart, they purchased. So it means now Z-Mart is the buyer. Why? Because they purchased $500 of merchandise inventory for cash. Remember, if we purchase, what will happen to my inventory? My inventory will increase. And remember, inventory, it's an asset. So if I purchase merchandise, it means my stock or my store or my inventory is going to increase. And when we purchase it for cash. So it means now how I'm going to record the entry on the 2nd of November. So because I purchased merchandise inventory, it means my merchandise inventory is going to increase and my cash is going to decrease. Why? Because we purchase. It means that the cash is going to go outside the company. So I'm going to say merchandise inventory 500 on the debit side and cash on the credit side. Why merchandise inventory on the debit side? Because we purchase, which means that my inventory is increasing. Remember again, inventory, it's an asset. And why the cash is on the credit side? Because we paid it in cash, which means that the cash is decreasing. Now let's look to the second scenario, when we purchase merchandise but with the cash discounts. So on November 2nd, Z-Mart purchased 500 of merchandise inventory, but this time they purchased it on account. And we have here a credit term, which is 210 and 30. We're going to talk in details about the credit terms in the second slide. But now, let's prepare the journal entry for the 2nd of November. Z-Mart, they purchased the merchandise inventory. So if we purchase, it means that my merchandise inventory is increasing. Remember, inventory, it's an asset. So if it will increase on the debit side. But did the company pay cash to purchase it? No, it's on account. So it means that when I'm going to prepare the journal entry, I'm going to say merchandise inventory to accounts payable. Why accounts payable? Because the company or Z-Mart, they purchase it on account. They did not pay the cash yet. So that's why now they have a liability. So that's why I have merchandise inventory 500 on the debit and accounts payable 500 on the credit. Now let's understand what does the credit term means. So the purchase discount terms typically written as this in the slide shows. So what does that mean? What is 2, 10, and 30? Now, if the buyer purchase the merchandise inventory on the credit, the seller will give him a credit term, which means that if the buyer pay his accounts payable within 10 days, then he's going to get 2% discount. So this is what 210 means. Otherwise, if the buyer didn't pay within 10 days, then maximum he should pay within 30 days. So this is how we read the credit term. 210, it means I'm going to get 2% if I pay my accounts payable within 10 days. Otherwise, if I didn't pay it within 10 days, maximum, I can pay it within 30 days credit period. Okay, so now let's see this example. Payment within discount period journal entry. So again, on November 2nd, Z-Mart, they purchased 500 of merchandise inventory on account, and we have here a credit term. And now we know how to read the credit term, which is 210 and 30, which means that if Z-Mart pay within 10 days, he's going to get 2% discount. Otherwise, he needs to pay within 30 days. So now Z-Mart, they purchase 500 of merchandise inventory. So what will happen? Their merchandise inventory will increase, and because they didn't pay, it was on account purchases, so I'm going to say accounts payable. So merchandise inventory to accounts payable 500, 500. Now, they're saying that on November 12th, Z-Mart, they pay. Now, Z-Mart, he paid. So he purchased the merchandise on 2nd of November, but on 12th of November, he paid the amount due of the purchases of November 2nd. So now the most important thing that you have to remember is the dates. So we know that we purchase on 2nd of November, and he's going to pay within 12th of November. So now we purchase on 2nd of November, and he's going to pay on the 12th of November. How many days? 10 days. So from the 12th of November till the 2nd of November, 10 days. So Z-Mart, he paid within 10 days. Now my question is, he paid within 10 days. If you go back to the credit term says that if the buyer paid within 10 days, he's going to get 2%. And Z-Mart, he paid within 10 days. It means that he's going to get a discount. So now, how am I going to record the entry? Now, Z-Mart, he paid. Okay, so I always say to my students that first, when you're going to prepare the journal entry for the payment with a discount, make sure that first you close your accounts payable. Why I have to close my accounts payable? So the accounts payable in November 2nd was 500. And now on 12th of November, I paid, so I don't have any liability. I have to pay it. That's why I'm going to close the accounts payable on the debit side. Now, on the credit side, I'm going to record the discount. Why I need to record the discount? Because Z-Mart paid within 10 days, and according to the credit term, that if he paid within 10 days, he's going to get a 2% discount. So how I'm going to record the discount? I'm not going to call it discount. I'm going to call it merchandise inventory. And remember, it will be on the credit side. So now how I'm going to record the discount? I'm going to say 500 multiply with 2%. Why 2%? Because on the credit term, the discount is 2%. So 500 multiplied by 2% will give me 10. So now how much did I pay in cash? How much Z-Mart pay in cash? So the cash, of course, will decrease because Z-Mart is paying. If you pay, your cash is decreasing. So now how much Z-Mart is going to pay? I'm going to say 500 minus 10, which is the discount. It means that Z-Mart will pay 490. Why Z-Mart will pay 490, not 500? Because he paid within 10 days and he get the discount. So remember, when you're preparing the journal entry of the payment and with a discount, always close first the accounts payable on the debit side, then on the credit side, the merchandise inventory, which is the discount, then also the cash, but you have to do them in order. Okay, so let's see this example. On November 2nd, Z-Mart, they purchased 500 of merchandise inventory on account with a credit term 2% discount if the buyer paid within 10 days, otherwise, he needs to pay within 30 days. So Zmart, they purchases the merchandise inventory. So what will happen to my merchandise inventory will increase because we just purchased. And because we purchased it on account, it means that Zmart now has a liability. So when I'm going to record the transaction of 2nd of November, I'm going to record it as merchandise inventory on the debit side and accounts payable on the credit side. Now, on December 2nd, Zmart, they decided to pay their accounts payable of transaction November number 2. So if we can see, as I said earlier, when we are talking about the merchandise inventory and the payment of this merchandise inventory, the dates are very important. So please pay attention to the dates. So as we said here, on 2nd of November, we purchased the merchandise inventory, and on 2nd of December, Zmart decided to pay. So now how many days from the 2nd of November till the 2nd of December? 30 days. If I go back to the credit term and I ask myself, do Zmart will get the discount or he is not going to get the discount? According to the credit term here, that Zmart will get the discount only if he pays within 10 days. But in fact, Zmart, he paid within 30 days. So there is no discount. So there will be no discount because the payment is after the discount period. So how I'm going to record the payment entry? I'm going to record it without discount. So I'm going to say accounts payable. I'm going to close my liabilities because I'm paying now. So I'm going to say accounts payable 500 on the debit side and cash on the credit side 500. Why 500? Because there is no discount, so it means that Zmart needs to pay the full amount. So now we'll talk about the purchase with the returns and the purchases with allowances. So you need to differentiate between purchase returns and purchase allowances. So what do I mean by purchase return? Purchase return, it means the merchandise is returned by the purchaser to the supplier. For example, if I'm a company and I purchase 500 merchandise inventory, then I decide to return 200. So this 200 is going to be considered as purchase return. Why? Because I returned it. Then you need to know what is purchase allowance. A purchase allowance, it means a price reduction to the buyer of a defective or unacceptable merchandise. What does that mean exactly? For example, if I'm a company and I purchase 500 of merchandise inventory, then I've noticed that 200 out of the 500 merchandise inventory was damaged or defected. So in this case, I have to contact the seller and ask him or notify him that 200 out of the 500 merchandise inventory is damaged. The seller will give me option either to return it and I'm going to consider it as a purchase return, or he's going to give me an allowances. What do I mean by allowances? It means that he's going to give me a price reduction. He's going to reduce the cost of the merchandise. It's not a discount. Remember, this is not a discount. It's a reduction of the price because of a defective or damaged merchandise. Now let's see an example of purchase allowances. In November 5, Zmart, the buyer, issues a $30 debit memorandum for an allowances for tricks for defective merchandise. So Zmart, he found a defective merchandise of $3 and he contacted Trix, which is the seller. Trix decided to give him a price allowances or price reduction on the merchandise defective. So how we are going to record the entry for any purchase allowances? We're going to say accounts payable to merchandise inventory. Remember, those purchase allowances of defective merchandise inventory, the entry will be here fixed. I'm going to say accounts payable to merchandise inventory with 30 and 30, which is the amount of the defective merchandise. Okay, now we'll see an example of the purchases return. We saw previously how we record the purchases allowances, but now let's see how we are going to record the purchase returns. Again, here we have Zmart. They purchases 250 of merchandise on June 1st with a term of 2% discount if the buyer, which is Zmart, paid within 10 days. Otherwise, he needs to pay within 60 days. So now how I'm going to record the journal entry for 1st of June. Zmart, they purchase merchandise, but they purchase it on credit or on account. How did I know on account? They did not mention here, but because there is a credit term, which means that they purchase the merchandise on credit. So now how I'm going to record the journal entry for June 1st? I'm going to say merchandise inventory to accounts payable. Why merchandise inventory on the debit side? Because Zmart, they purchases the merchandise. So it means that my merchandise is increasing. And my accounts payable is also increasing, my liability, because they purchase it on credit, which is 250, 250. Then they said on June 3rd, Zmart, they return 50 of goods before paying the invoice. So on 3rd of June, Zmart, they decided to return $50 of the merchandise. So now what they did, they returned back before paying the invoice. So how we are going to record the entry for the purchase returns? We're going to say accounts payable to merchandise inventory. Why accounts payable on the debit side? Because now I'm returning some of the goods, which means that when I'm going to pay, I'm going to pay less of $50 because I just returned the merchandise. And then my inventory will decrease on the credit side. Why? Because I'm returning now. I'm returning some of the merchandise. So it means that my inventory is decreasing. How much it is decreasing by? $50, which is the returned amount. Now, when Zmart now on June 11, they're going to pay what we call the merchandise inventory. Now they're going to pay. So when did they pay? They pay on June 11. So now my question is, from 1st of June, so when did they purchase the merchandise? They purchased the merchandise on 1st of June. When they're going to pay on 11th of June. So from 1st of June till 11th of June, which is 10 days. If they are going to pay within 10 days, if I go back to the credit term here, they're going to have a discount. Why? Because the credit term says that if we pay within 10 days, I'm going to get 2% discount. And yes, Zmart, they're going to pay on June 11. So from 1st of June till June 11, 10 days. So they will have a discount here. So now how I'm going to record the entry? As I said earlier that we have to first close our accounts payable, then we need to calculate the discount, and then we need to calculate the cash. So first of all, I'm going to calculate close my accounts payable. But remember, how I'm going to close my accounts payable? I'm not going to close my accounts payable here with 250. Why? Because in June 1st, my accounts payable was 250, and in June 3rd, I returned some items. So if I can see here the T accounts, we know that the accounts payable normal balance is credit. So in June 1, we have a credit of 250. But in June 3rd, I returned some items and I decreases my accounts payable with 50. So now, when I'm going to record the payment entry, I have to adjust for the accounts payable. My accounts payable, I'm not going to pay now 250. I'm going to pay 200. Why? Because I already returned 50. So it means that my accounts payable is 200. I have to pay 200, not 250, because 50, I already returned it in June 3rd. So that's why I'm going to record the accounts payable. I'm going to close the accounts payable on the debit side by 200. Now I need to calculate my discount. Why I need to calculate discount? Because Zmart, they pay within 10 days, which means that They have to have a discount. So I'm not going to call it a discount. We always call it merchandise inventory, and I have to record it on the credit side. So I'm going to say 200 multiplied by 2% will give me 4. So the discount is 4. Now, the third step, I need to record my cash. And of course, because Z-Mart, they are going to pay, so their cash is going to decrease. But they're not going to pay 200, they're going to pay less than 200. Why? Because they have a discount. So 200 minus 4, which is the discount, it means that Z-Mart will pay 196 in cash because they got the discount. Purchases and transportation cost. The buyer and the seller, they must agree on who is responsible for paying the freight or the shipping cost, or what we call it transportation cost, and who bears the risk of loss during the transit of merchandise transaction. This is the same as asking at what point ownership transfers from the seller to the buyer. So we call it FOB, which is free on board point. In Exhibit 5.7, we identify two alternative points of transfer. We have FOB shipping point, which means that the buyer accepts the ownership when the goods departs from the seller place of the business. And the buyer will pay the shipping cost, and the risk of the loss is in his transact. So as you can see that FOB shipping point, who will pay the transportation cost, which is the buyer. If the buyer is going to take the transportation cost or pay the transportation cost, the buyer needs to prepare an entry. How he's going to record the entry? As a merchandise inventory to cash. But if we have FOB, which is free on board destination, the second scenario, it means that the seller will pay the transportation cost. And if the seller will pay the transportation cost, when he's going to record it, he should say delivery expense to cash. It's very important. When we say FOB shipping point, it means that the buyer is going to pay the transportation cost. If I say FOB destination, then the seller is going to pay the transportation cost. And you have to know how we are going to record the transportation cost as a journal entry. Now let's see this example of transportation cost. Z-Mart, they purchase merchandise on a term of FOB shipping point, and the transportation charge is $75. Now when we say FOB shipping point, if you refer to the previous slide, we said if it's FOB shipping point, it means that the buyer should pay the transportation cost. How we record now the journal entry? We're going to say merchandise inventory to cash 75.75. Remember, if it's FOB shipping point, it means the buyer, which means here Z-Mart, is going to take the responsibility of paying the transportation cost. And this is how we prepare the journal entry. Now, how we can calculate the cost of purchases? This is very important. As you can see in Exhibit 5.8, that in order to calculate the net cost of merchandise purchases, which means how much it costs you exactly to purchase the merchandise. First of all, you're going to take the invoice cost, how much it costs you. So if there is any other, for example, purchase discounts or purchase returns, remember that those purchase discounts and purchase returns will decrease the cost of the merchandise purchases, which means that you did not pay 235,800. You pay less than that because you get some discounts and you return some items. And if you're going to pay the transportation cost, you have to add it with your merchandise purchases. So as you can see here, the total net cost of merchandise purchases, it's 232,400. So this is how we calculate. This is very important, especially if you have a multiple choices question. This is the end of Chapter 5, Part 1.